Well, folks, what a crazy year it has been in 2025 in the stock market. It started out so bullish, then everybody got into straight panic, and it was a crazy market back in March and April, right? And now market's back at all-time highs. And with all of that being said, the S&P 500 up about 6.8% so far. The public count up over 22%, over 3x of the market, calculated by Fidelity Investments. But what a crazy year it's been. We still got about a little less than 5 months left in this year. Public count sitting around all-time highs right now, $3.8 million plus dollars. Four stocks I'm buying now, August 2025 edition. That's what we're getting into. Four incredible investment opportunities that I believe in the market, let's just say, have incredible upside over the next three to 5 years here, and we'll talk about that. We'll talk about the risk in this video and go across these stocks. I like to take you very in depth with these companies and kind of talk about the pros and cons and those sorts of things. And by the way, I'm recording this from New York City. This is I'm on one of my last days here in New York City, and then finally going back home to Vegas. So I'm actually looking forward to going back home because I haven't been home in 2 weeks now or so. So looking forward to being back in Vegas. But it's been a good trip in New York City. I need one thing and one thing only from you guys. Please do it for me. Just hit the like button. That's all I need from you guys. Just hit the like button on this video. That's it, man. I hope you can do that for me. That's all I ask for this video. I've been prepping this for hours today. And additionally, if you want to subscribe here to the channel, you can certainly subscribe. We are now at, gosh, how many subscribers do we have on the channel? 860 or 870,000. So I appreciate everybody subscribe to the channel. Okay. All right, guys, you ready to rock and roll? Stock number one of these four stocks up here is Amazon. Amazon stock is number one of these four. So this is a major investment for me in the public count. I just stuck another $80,000 plus in Amazon stock here today. In the public account, that is. So this is over a $300,000 position now in the public account, so far up $111,000. And I think that's small money compared to where I'm going to be at with this position. Let's call it 3 to 5 years from now. It's going to go up immensely. Okay. Now here's what's going on with Amazon. There's an A plus income statement they just came out with last week. The total net sales of this company went to $167 billion for that 3-month span. Let me say that again. In a 3-month span, with consumer sentiment in the dumpster, the company still did 167, almost $168 billion of revenue. Insane, right? If we compare that versus the same quarter last year, they did 147 billion. So they grew net sales almost $20 billion on a year-over-year basis in a 3-month span. Unbelievable. But maybe even more so, operating income went to $19.1 billion from $14.6 billion. Income before income taxes went to $20.8 billion versus $15.2 billion. Net income went to over $18 billion from $13 billion, and then we had diluted EPS go to $1.68 versus $1.26. So Amazon is firing on all cylinders with this business model. Now, to illustrate why Amazon is such an incredible investment opportunity, okay, there's 2 core points. One slide I did not prepare, but let me mention that before we get in this next part of why Amazon is such an incredible investment opportunity. The valuation for Amazon has come down immensely over the past, we can say, 5 to 7 years. Amazon used to trade at extremely high P ratios. This is no longer the case in regards to Amazon. That makes it a very attractive investment opportunity, given the business model still has great growth, as I just showed you here, right? But we don't have to pay the ridiculous PE ratios we used to pay, right? But the other part that makes Amazon such an interesting investment opportunity right now, is if you look at their net sales up 13%, good solid number for the company. But look at how much leverage they're getting when it comes to operating income, net income, and diluted EPS. Check this out. Operating income grew 30% in the quarter with net sales up 13%. We're talking that's well over a double up in percentage growth there. That's incredible. Now, additionally, net income grew 35% for the company year over year, even though net sales was only up 13%. This is one of the most attractive things you can ever find in the business model. Like the worst thing for a business model is, if the revenue is going negative for the company and their profitability is going down at even a faster clip. That's disastrous, right? Another worrisome thing is, let's say a company grows revenue 13%, but yet their, let's call it net income only goes up 5% or something like that. That's a little worrisome. When you can get a net income rising much more rapidly, operating income rising much more rapidly than total net sales, great news. Great news, okay? Diluted EPS grew 33% for the company year over year versus a net sales up 13%. That's unbelievable. Now imagine if they can get net sales up to 15% or 20%. Oh my gosh, okay? Now additionally, I wanted to illustrate this point because this is big. We're seeing something happen with Amazon's business model right now that we have not really seen in the past decade. So check this out. I'm taking you in the nitty-gritty numbers here. You're only going to get this type of information here, okay? Listen. When you break the business model down and you look at North American segment, okay, operating income grew in the North American segment 48% on a year-over-year basis. Unbelievable number. But it gets dwarfed by the international segment. The international segment used to be a huge money suck for Amazon. They used to lose a fortune internationally. But look, recently they turned over to profitability. If you look at last year's quarter, they had operating income at $273 million. Good job. But they're taking those numbers up to whole other stratospheres. Operating income for this latest quarter for the international segment grew to almost $1.5 billion. That's 448% growth in operating income for the international segment on a year-over-year basis. You're going to be flipping my flapjacks. Can you imagine where the international operating income is going to be 3 years from now, 5 years from now? Even if you slow this growth rate exponentially, I mean, it's still going to be ridiculous, okay? Now, the interesting thing is AWS net sales grew 17%, but operating expenses grew 22%. Now, if you look at operating income, that only went up 9%. So this is an interesting phenomenon we have not seen really in the past decade for Amazon. It used to be people looked at AWS as, oh, you know, it's a shining star in Amazon's business model. So this is really over the past 5-10 years. And people used to basically disrespect the rest of Amazon. They said Amazon e-commerce, trash, international business, trash, Whole Foods, trash, Twitch, trash, everything else, we don't care about it. We're just investing in this because of AWS, right? Well, now you got to start respecting the rest of their business models. E-commerce business should no longer be disrespected. The international business should no longer be disrespected. The advertising business, I haven't shown you those numbers yet, that should no longer be disrespected. We got to start respecting all these other businesses because those are the ones that are absolutely crushing it right now. AWS is actually in kind of, let's call it sleepy times for that business, right? Now, with that being said for AWS, you could look at this another way. You could say they're spending extremely aggressively AWS because they expect in 26 and beyond to accelerate that growth rate again, which could very well happen. Do not be surprised, shocked at all if you see a major reacceleration of growth for the AWS business, even in like a quarter from now. But I'm really thinking about 26, 27, 28. So what you're seeing for AWS growth now, do not be surprised if they accelerate that number to a 20% plus number in the next few quarters. Do not be surprised, okay? And so just keep that in mind. Then the question is, once they go to 20% plus, what are we talking after that, okay? Now, additionally here, I posted this inside my private stock group's Amazon Discord chat, right? We got a Discord chat in the private group for a ton of different stocks, the market, a ton of different chat categories, and one of them is Amazon, right? And this is where Amazon shareholders can share notes and different things they're looking at with the business and what's going on there and things like that, right? So I posted this. This is a growth rate accelerating for the ad business. If you don't know, Amazon's really got three big dog businesses, okay? One is their e-commerce business. The other is AWS, and the other is their ad business. Now, they have a bunch of other businesses other than that, but that's their three big dog businesses, if you're wondering where they actually get their big money from, okay? Now, the ad business, look at this. They just, and this is type of nitty gritty stuff. No one's going to be talking about this, okay? The ad business just posted its fastest growth rate in the past 5 quarters. The ad business grew on FX, excluding FX, right? 22% in this latest quarter. The previous quarter was at 19% growth rate. So it accelerated to 22%, and that's the fastest growth rate. You have to go back all the way to Q1 2024 to find a growth rate faster, which then it was growing 24%, right? Then they came in with 20%, 19%, 18%, 19%, and now 22%. Now, there's also a clear correlation, a clear trend that the ad business is accelerating growth, right? Because they went from 18% to 19%, 22%. So now the only debate for the ad business is where's a top for the growth rate percentage. Does it keep going up from here? Next quarter, do we see 25%, 30%? Like, that's a real question there, right? So that's big. Now, additionally, there's something very important happening with the balance sheet right now, okay, of this company. Very important. If you look, the cash and cash equivalents, marketable securities came in at about right around $93 billion on the latest quarter. Phenomenal number, right? But the two bigger things, I think, is one is long-term debt. They're starting to pay that down. If you look at long-term debt, it went from $52 billion plus basically just a few months ago, right back in December 31, 2024. So just, we can call it 2 quarters ago, to now they got it down to $50.7 billion. So they reduced long-term debt by about $2 billion roughly just in the past 6 months. Okay. So long-term debt, I wouldn't be surprised if they keep bringing that down. Additionally, stockholder equity went to $333 billion from $285 billion back December 31st. Okay. So in a matter of a couple quarters here, they increased stockholder equity by, close to $50 billion. So the balance sheet's getting stronger and stronger. Now, the other thing about Amazon, right, is you need some stocks that you hold in your portfolio that you can just sleep well at night. You can just sleep well at night, right? You don't worry about these stocks. You don't stress over them. Amazon represents that to me. I don't worry about Amazon. While I'm sleeping, massive millions and millions of people are placing orders on Amazon every day, right? When, I'm sleeping, AWS is making fortunes of money because it's the backbone of so many companies across the world, right? And their ad business is printing money. I don't have to worry about them. They got an incredible income statement, one of the best in the world, right? They're on pace to be the first $1 trillion a year revenue company, right? We're looking at a company that is attractively priced on a valuation basis. Such a strong balance sheet, great management team. Andy Jassy leading this company, who worked alongside Jeff Bezos for the longest time. And they're spending aggressively for the future. And that's what Amazon always does. They always spend very aggressively for massive future growth. They've done that with the e-commerce business over time, right? They've done that with the advertising business over time. And they're doing that with AWS, right? And so, the moral of the story is here, I could sleep very well holding Amazon stock, right? Now, I want to draw your guys' attention to a video I put out on the Reaction channel. If you guys don't follow me on the Reaction channel, this is where I react to a bunch of different content. It's a little bit of a different vibe than this channel. I react to a lot of Wall Streeters and CNBC clips and Bloomberg clips and different things like that, right? On Jeremy Lefebvre Makes Money. But in this particular video right here, if I recall, it's called My Stock Just Imploded. If I recall, I shared my Amazon projections for the next 5 years for that company, okay? So if you want to see my Amazon projections, where the stock price is going, revenue's going, net income's going, all that stuff, you might want to check out that video there on the Reaction channel. So just keep that in mind when this video is over. If you want to check that one out on the Reaction channel, you might want to do that, okay? Now, before we get into stock number 2, I want to shout out my private stock group, private wealth group, 1000xstocks.com. If you want access to all of that, that is access to all my courses. Become a Master of Stock Market course, my course called Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, Jeremy's Valuation Mastery. You need to learn how to value stocks properly. That will be the pinned comment down there. You can click on that, fill out a form. Let's bring you up to a much higher level than where you're at. You also get to see the moves I'm making my $3 million plus Fidelity account each week, right? And full access to 1000xstocks.com, the Discord chat, all that good stuff. Once you join us in there, we'll send you your Steel membership card for the private group and your Steel membership card for 1000x as well. Once again, that will be the pinned comment down there. Let's get you up to a higher level than where you're at, okay? Alrighty, next up here, stock number 2 of these 4 is Cheesecake Factory. So this is a stock I'm up almost $70,000 on so far. That does not include dividends received from this position. It's a major position for me. I'm up a lot. It's still a buy. Now, don't let the name of this company trick you. Because a lot of people hear Cheesecake Factory and they're like, big deal, boring stock. No, sir, no, ma'am. This is no boring stock. This is a stock with an incredible run rate of growth for the next 10 plus years. You haven't seen anything yet when it comes to cake, okay? No, they own the Cheesecake Factory, okay? It's an ATM machine. Like, Cheesecake Factory usually has several locations in every major city across the United States of America. Like, you live in the United States of America, you might have been to Cheesecake Factory before. Like, it's very famous. I mean, it's at a lot of malls, popular malls, right? Popular areas, restaurant areas, those sorts of things. They have, solid food, I would call it, right? They have, very, very, you see a Cheesecake Factory, it's a Cheesecake Factory. Like, these buildings look very different than anything else you're going to see out there, right? So they spend a lot of money on their locations. Their locations are big. They do big volumes, huge volumes. Their restaurants are packed. Anybody that goes to Cheesecake Factory, that, right? And they also sell cheesecake. So they're phenomenal at selling their dessert as well, right? So that's Cheesecake Factory, ATM machine. Great business model, one of the most successful restaurant concepts in the history of the United States, right? I would definitely put at least top 10 most successful restaurant concepts in terms of sit-down restaurants. But what's coming behind that is much more exciting, in my opinion. We know the ATM machine. It's great. Cheesecake Factory. What's coming behind that is so much more exciting. North Italia has one of the most untapped abilities over this next 10 years to really capture the United States appetite, no pun intended, for Italian food. And this is a huge appetite. We know Italian food's a massive category, right? And there's been a company that over the past 20 to 30 years did a phenomenal job of really capturing the masses to go eat there when it came to Italian food. You know what that is? It's called Olive Garden. Olive Garden did an amazing job really capturing the baby boomer generation, I would say, into Italian food, right? And doing it on a higher level than anybody done. You've got some other regional concepts out there for Italian food that are decently successful, but not that successful. And you have a lot of mom and pop places. But the one place that really knocked it out of the ballpark with the baby boomer generation, just blew up over the past 20, 30 years, is Olive Garden, right? The issue with Olive Garden, and why this is such a huge opportunity for North Italia over this next, I would say, 10 to 20 years to really capture the millennial generation, is Olive Garden, one, their food quality standards have gone down immensely. I took my son for the Never Ending Possible. I was told him, I thank you for the Never Ending Possible, right? It's a thing Olive Garden does, right? Took him last year. Oh my gosh, food quality is so bad. Like, once you've experienced good Italian food, like, oh my gosh, like Olive Garden's rough, right? Additionally, their restaurants are just dated now. I mean, they're extremely dated when it comes to these restaurants. They're not the type of places that really, for the millennial generation, they feel like, oh, this is a cool place to go, like the Olive Garden, right? Now, additionally, the company that owns Olive Garden is a company named Darden Restaurants, okay? Now, their parent company, Darden Restaurants, they just announced they're going to increase their quarterly dividend, and they announced they're going to do a new $1 billion share repurchase. I'm applauding this like nobody's business, okay? Because you know what this means? How are they going to be able to bring the quality of the food up to a higher level at Olive Garden? You can't. Not with the spending like they're going to be spending on quarterly dividends and share buybacks, right? Additionally, how are they going to modernize the Olive Garden restaurants? They're not going to be able to, right? And additionally, these boys are broke over there at Darden. They got $240 million. That might sound like a lot of money if you don't understand, what a big amount of money is, for a restaurant. But here's the deal. Darden Restaurants owns almost 2,000 restaurants, okay? They don't just own Olive Garden. They own Yard House and a bunch of Capital Grill and a bunch of other restaurant concepts, okay? If you've got only $240 million of cash and you're going to do $1 billion plus share repurchase and you're increasing your quarterly dividends, you're not going to have the money to, I would say modernize Olive Garden and really bring it up to what the level you need to bring it up. So I'm looking at Olive Garden. I think they're going to be in real trouble. 2030 to 2040, They better try to make as much money off the baby boomers as they can over this next few years, because I think it's going to be brutal times ahead, 2030 to 2040 for the Olive Garden. And I think we'll be talking about, you'll start to see their comps restaurant sales go down immensely in that decade, essentially. It's going to be bad. And they're not going to have a way to fix it. They're not going to have the money to fix it. That's the thing. They can't do it. And then Olive Garden is their golden goose. So their golden goose, in my opinion, is going to be going down, and they're not going to have the money to fix it because they spent all their money on share buybacks and dividends and all this stuff. So it's going to be a rough situation. Now, you got to, this is a very important next point I'm going to bring up here, okay? Everybody's got to understand this, okay? Listen, the millennials are really taking over the economy for the next 2 decades. The millennials are now all pretty much aged 30 to their 40s, right? Now, the 30s to 40s is when you really start to, increase your income a lot. You have kids, you buy homes, you buy cars. It's, for a lot of folks, it's kind of their peak earning, spending time, right? And that really runs into your 50s, and then eventually people start to retire, or they start to, kind of downsize their businesses or things like that, right? But the peak kind of earnings potential is that kind of 30 to 50-year-old bracket. And so for this next 2 decades, the millennials are really going to control the economy, right? And then it'll be Gen Z after that, right? So this is a whole game we've got to play out over the next couple decades. Now, you've got to think about the millennials and how they different versus, I would say, the previous, and I don't want to, cast away the generation that's between the baby boomers and the millennials, right? But the baby boomers grew up with different standards when it came to food, and a lot of it stems back to kind of even like fast food and things like that, right? So for instance, if you were a baby boomer, like what were some of the big concepts that took off in mass when you were in middle school, high school, college age, 20s, right? Maybe even into your early 30s. I mean, the concepts that really took off were concepts like Taco Bell, concepts like McDonald's, right? Massive expansion. They got put on every corner in the United States of America. And to this day, in 2025, you can go to just any major city out there. There's a trillion Taco Bells and McDonald's everywhere, right? Burger King. Now, when that's kind of your fast food expectations, because that's what was blowing up at that time, right? It leads into, I would say, unfortunately, more poor quality when it comes to everything else. Now, when you think about the millennial generation, like what's really taken off over the last 2 decades, right? It's changed like Chick-fil-A, right? Chick-fil-A, much higher quality than somewhere like a Taco Bell or a McDonald's, right? And this has really blown up over the past 20 years. Additionally, Chipotle has taken off, right? And although Chipotle standards have been slipping, in my opinion, over the past 5 years, still Chipotle like quality of food is not even, it's a night and day difference versus like Taco Bell, McDonald's, things like that, right? So the millennial generation has gotten used to, even on the lower category, of a much higher quality of food, which makes it very tough if you're a restaurant chain and you serve, substandard food. And so that's a big point that I think everybody's got to understand about how the trends are going to change when it comes to sit-down restaurants over this next couple decades as millennials really capture the economy over this next 2 decades here, okay? Now, additionally, Flower Child, this is the biggest thing, in my opinion, that the whole company has going on. Flower Child's a concept that really caters around healthy food, okay? Quality, healthy, fresh, made for you, good food. Go to a Flower Child sometime, just experience it. You'll see the price points are very low compared to like a sit-down restaurant, right? You go up to the counter, you order, you say, I want this, I want a global, blah, 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 right? They make it up for you. It's piping hot when you get it. It's so healthy, like the food quality is so amazing. It's awesome, right? But this is a way bigger opportunity. And the reason this is such a big opportunity is for Flower Child, they don't need a ton of waitresses and waiters and staff to seat you and whatnot like a North Italia does, like a Cheesecake Factory does. Flower Child, you just go up, order, you go sit at a seat, boom, that's it. And then they come bring you your food. For that reason, it's going to be much more easy to manage these locations and open these locations, okay? And since they're going to be at a lower price point, you're going to be able to fit a lot more Flower Childs in areas that you just couldn't support in North Italia. You just couldn't support a Cheesecake Factory. A Cheesecake Factory, you need massive traffic. They're so big, they're so capital intensive. Like, it's hard to open a Cheesecake Factory. And that's the reason there's only 200-something Cheesecake Factories in the United States of America, because you need crazy traffic. Flower Child's not going to need that. From what I heard from the management team, around 50% of Flower Child's business is to go. Guess what? We're in the age now, for the next several decades, of food delivery, right? DoorDash, Uber Eats, all this stuff, right? Maybe the robots are going to deliver our food eventually, right? And you go on an app and you order and it comes to your house, right? And that's just going to be bigger and bigger over the next several decades, right? And Flower Child is so perfectly positioned to really capture this opportunity over this next, several decades when it comes to go food, right? And at that lower price point. Now, additionally, past that, they have a bunch of other concepts: Culinary Dropout, Blanco, the Henry, Doughbird, a bunch of these other concepts, right, that have expansion opportunity. I want to draw you guys' attention to one that I love. Okay, this is not a big opportunity for the company, but it's called Olive and Ivy. For anybody that's watching this, lives in Arizona, go to the Scottsdale location, okay? For my foodies, for my people that like a good vibe, go there, especially when the weather's nice. Go sit out on the back side of it, essentially outside. They even got heaters out there. Oh, it's beautiful, okay? Trust me, okay? Trust me. For my foodies and vibes people, go to Olive and Ivy sometime. I love that spot, okay? Not a big opportunity. This is just a side note. This is like a small concept they have, okay? You're not going to see Olive and Ivy's take off all over the place, but just trust me. For my foodie people, my vibes people like to go to Scottsdale. Trust me, okay? Now, here's the deal, okay? Cake's latest income statement. I put this in the income statements tab inside the private group. Here's the deal. Revenues went to $955 million from $904 million. Additionally, if you look at income from operations, that went to almost $65 million on a year-over-year basis versus $58.6 million. So income from operations increased to 6.8% from 6.5%. So B plus income statement for Cake overall, okay? Now, here's the deal. Remember, Darden Restaurants has like 1,900 plus concepts. They're approaching 2,000 concepts, in terms of how many restaurants Darden has opened. They're a big dog in the restaurant category. Look at how small Cheesecake Factory is. If you add up the total of company-owned restaurants, it's only 362. And then they have 33 internationally licensed restaurants for Cheesecake Factory, right? It's like hardly anything if you compare them to somebody like a Dart. And it just goes to show you like how much opportunity is here. Now, here's where, if we fast forward 10 years from now, here's how many locations I believe will be out there. I believe they'll have 300 cakes. Now, Cheesecake's not going to be a big expansion opportunity for the company over the next 10 years. It's a minor one. But I can see them having 300 locations of Cheesecake Factory in 10 years from now. Okay. North Italia, they only have like 46 locations right now. I can see that getting to at least 500 10 years out. If we look at Flower Child, they have around 50 concepts of that right now. I can see them taking that to around 800 over time, over this next 10 years. And as far as other concepts, they have around 50 right now. I can see them taking that to about 200 long term, okay? And so in 10 years from now, you could be looking at a company here that has around 1,800 concepts in total, right? And so you're looking at a company that, if we fast forward 10 years from now, I think will be much more closely, I would say, valued and of the size of somebody like a Darden Restaurants, okay? My hope is in 10 years from now, they'll still be as well run as they're run, okay? Because that would mean I'll stay invested in it for a long, long time. But that's what we're looking at here, okay? Now, here's the thing with Cake that's so beautiful. They're going to be adding more and more locations. We know that, right? So if you put on more and more locations, plus positive comp store sales, and you manage your expenses well, which Cake has clearly proven over the past year they can do that, right? That means higher and higher profits each year. As you bring in higher and higher profits, right, you take your net income from $200 million a year to $300 million a year, $400 million a year, $500 million a year, $700 million a year, right? That gives you even more money to then go ahead and open more locations. More locations mean even more profits. And so you get in this beautiful cycle that I believe Cake's going to be in for the next decade, where essentially the company is just going to be posting like bigger and bigger and bigger profits, more locations, and I say that's pretty darn exciting. Now, the last point I'll make here in regards to Cake stock, before we move on to stock number 3 of 4, is really around valuation for Cake. We're looking at 1000xstocks.com, and one of my favorite features on 1000x is you can compare 3 companies versus each other, okay? And you can do that in a second. And it will give you all these different ratios and whatnot, so you can really compare 3 companies versus each other. So we know Wingstop's going to be adding a ton of locations over the coming years, right? We know Cava's going to be adding tons of locations for the next 5-10 years, right? So those have huge expansion for their brands, Cava and Wing, right? But Cake, we know they're going to be adding massive quantities of restaurants between Flower Child and North Italia and their other concepts over the next 10 years, right? But here's the deal. Wing trades at a 55 forward P. Cava trades at 148 forward P. Cake trades at a 17. I love the valuation of Cake. And so I have limited downside risk with incredible upside risk over this next 5-10 years. I can't say the same for Cava or Wing. Wing and Cava, they're like, ooh, they're exciting, right? Bunch of locations hopefully be open over the next 10 years. but they come with significant risk because of the forward P on those stocks. Risky, right? And so that's just another reason I love cake. All right. I love cake too, by the way. Cake. Okay, next one up here. Number 3 of these 4 stocks is Google McDougal. Google McDougal. So I started a position April 23rd. So far, I've got 444 shares of Google in the public count, up about 25% on those shares so far. Okay, now Google. Everybody's all worried about ChatGPT. It's been talked about extensively for the last several years, right? They've got a lot of signups. A lot of people use ChatGPT a lot now, right? And so Google constantly has, for the last couple of years, this worry about ChatGPT. No one's going to use Google search anymore, right? It's going to mean bad things for Google's business model. And so, like, what are the latest results? Do we see that in the results? Okay. And here's the deal. The company just posted a grade A income statement. Like, we're like this fear of like ChatGPT is going to ruin Google. We're just not seeing it in the actual facts, in the numbers, in the math. Revenues went to $96 billion plus from $84 billion. If we look at income from operations, it went to $31.2 billion from $27.4 billion. If we look at income before income taxes, went from $27.5 billion to $33.9 billion. Net income went from $23.6 billion to $28.1 billion. And diluted EPS went from $1.89 to $2.31. So you can say ChatGPT, blah, blah, blah. It's just like we're just looking at the data, and the data just looks phenomenal. Okay, it just looks phenomenal. Now, here's my bull case, base case, and bear case for Google over the next few years, and you can really see why this is just such an attractive investment opportunity. Now, whenever I do my bull case, base case, bear case, I usually go a little more conservative with my numbers because I don't ever want to like expect the world, right? So my bull case for Google is that they grow 12% revenues per year 2026 through 2029. Is that some crazy number? No, that's my bull case. That's not even like, whoa. Net income growth of 15% per year 2026 to 2029. Is that some crazy expectation for Google? No. These are actually very modest numbers for a bull case for Google, okay? And you know, if you're growing top line 12% per year on average, bottom line 15% per year on average, you're going to be able to command a 25 to 30 PE. And look at this. In 2029, the stock should be priced somewhere between $443, right? And stock's less than $200 right now. It's in the hundreds. And $532. That gives me a compounded annual growth rate on the low end of 23%. And on the high end, right? That gives me a compounded annual growth rate of 28%. That's pretty darn attractive. Now, let's look at my base case. My base case for Google McDougal, okay? So this is what I really expect to happen. I expect them to grow 10% revenues on average 2026 through 2029. Is that a crazy number? No, that's like very modest expectations from me when it comes to Google, right? And 12% net income growth per year. Once again, extremely modest expectation from me, okay? Now, 10% top line, 23% or 12% bottom line, 23 to 28 P's, very fair for this company. So that puts the stock in 2029 somewhere between $367 and $447, which gives me a compound annual growth rate on the average there of somewhere around 20%. Listen, man, if I can run my base case on a company and get a compounding annual growth rate of around 20%, I've got to take that risk reward. I've got to take that risk reward. Like, it's just, give me a compounding annual growth rate of 20%. I'm taking you, man. No, what about my bear case for Amazon? Because that's always a fun one to run, right? Here's my bear case, or if not for Amazon, for Google McDougal. Here's my bear case for Google McDougal, okay? Here's what we're looking at. For my bear case, I did revenue of only 7% per year. That would be disastrous. If Google only grows, like you think about Google search, you think about Android, you think about YouTube they own, you think about YouTube TV, right? You think about the Google Cloud, you think about Gemini and their AI opportunity, and you think about the million other businesses they own. If this company only grows 7% per year, disaster for Google. But let's run numbers. A 7% embarrassing growth rate for Google for 2026 to 2029 on average. Awful. And I did them at only 8% net income growth. 8% on average. Disaster. Disaster. 20 to 25 PE would be fair for a company growing top line 7%, bottom line 8%, right? Even in this disastrous bear case, Google gives me a compounding annual growth rate of 9% on the low end and 15% on the high end, which means even under a bear scenario, Google would likely still outperform the S&P 500 to a pretty good extent over the next 5 years, 4 to 5 years, we can call it. I've got to take that risk reward, man. What else am I going to say? I gotta take that risk reward when it comes to Google McDougal, okay? Next one up here. Number 4 of these 4 stocks. Listen, before I even get into this one, okay? This next one, I understand is controversial. I understand this next stock has been a hated stock over the past few years, okay? I understand no one wants a piece of this stock right now. I'm out here actively investing in this stock very consistently. I love this risk reward profile for the next several years. It's a turnaround candidate. I get it. It's not everybody's cup of tea, but some of the biggest amounts of money I ever made were companies that were going through a really tough time. If I think about Meta, I've made 7 figures off Meta. 7 figures. Let's be honest, I bought into Meta when it was going through, and especially a lot of my heavy shares, I bought into that when it was going through extremely tough times and everybody thought Meta was doomed or whatever, blah, 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 okay? Palantir. Look at my Palantir gains I've been able to accomplish, right? What is it, 2,000% plus made on Palantir? Listen, I bought those shares heavy in 2022 when Palantir was going through a very tough time. The growth rates were horrible. They kept going down. The stock was down to a 6%, $6 share price. $6 share price for that company, right? Now, additionally, if we think about ELF, when I was buying into ELF in the public account, it was $7 a share, which was also they were in a really tough place at that particular time. And Tesla back in the day, right? Tesla, one of my best gainers ever. We think about when I invested in Tesla, they were going through very tough times. People were questioning EVs and a lot of things in regards to Tesla, right? And then fast forward and, the gains were the gains. And that was a game-changing stock for me, right? And so keep in mind, a lot of my best investments ever have been in companies that were going through a tough time, right? And had a lot of question marks. And people are I'm not sure about this, right? So all that to say, stock number 4 is Nike. Ticker symbol NKE on this one. This stock I haven't made any money on so far. I'm down 3% on the position. I think that's going to change a lot over this next few years. So when it comes to Nike, okay, they're in right now what I believe is a multi-year trough period for margins, for revenues, and for profits for this company. And I believe all those are going to be reversing over this next 12 months, essentially. And you're going to start to see the margins go up over the next 12 months. You're going to start to see the revenue go up over the next 12 months. And you're going to start to see the profits. Now, the margins in operating income, net income, you're going to see those go up exponentially more than what you're going to see revenue go up over the next few years. Whenever you've got a company that goes through one of these trough periods and comes out to the other side, the increase is quite dramatic on the other side, okay? Now, Elliott Hill just took back over the company, okay? Listen, Elliott Hill is a legend at Nike, okay? He worked for the company for over 30 years. He started with the company as an intern when it was just a very small company back in '88, okay? And before he left the company, he was a president of consumer and marketplace, okay? Extremely important individual. He should have been who was picked to be the next CEO, but they picked somebody else. And so he decided to retire from the company, okay? Which, he doesn't really talk about it publicly, but I can almost guarantee you this man retired because he probably felt a way about being skipped over for CEO. He should have been the next CEO named for this company, but instead they named this guy, John Donahoe. They named him the CEO. Horrible choice by the board of directors and a catastrophic mistake. The great thing is Nike is such an amazing brand that they were able to make it through that horrible period, which was almost a 5-year period, that this man had so many red flags, it was ridiculous. His father was an accountant, he was in a fraternity, and he worked for Bain. 3 red flags, okay? You can get over one of those red flags, but you can't get over 3 of those red flags, okay? Bain is basically a consulting company that likes to tell businesses how to operate businesses, even though, people like him never even ran a business. They think they know, but they never actually did it, right? It's ridiculous. Consulting world, right? And so there was red flags all over this gentleman, but still the board of directors made a horrible decision. They made him the CEO, and they paid the price, right? And the price has been paid. The revenues, we see what's happened to that. We saw what happened to margins, profitability. But that is all of the past, right? Elliott Hill's now taking back over this company. He's getting everything back in the right track. Just a few days ago, I was in the Nike store here in Manhattan, right? It's like a 5-level store, incredible store. And, it's just funny because I don't think I wouldn't shop in so many stores. I don't think I saw any store that busy. Like, it's just ridiculous. Like, I was in a shoe section. They had like 5 different people just going back there to grab shoes and just bringing them out, 5, 10 at a time. Just ridiculous, right? Just shows you how powerful Nike brand is. No, the phenomenal thing, you got to always remember, business is competitive, right? Business is cutthroat, business is competitive. And if you think about the DNA at Nike, especially with Elliott Hill running this company, right? Like, they really adopt the personality of their athletes, extreme competitors, right? People that like to win championships, people that like to win MVPs, things like that, right? Like to be the best of the best. And that's what this company really has. Now, to illustrate this point, okay, on 1000xstocks.com, we have our earnings call tab. Now, you can listen to an earnings call on there, but we also have AI transcripts that AI will decipher and tell you like the most important things that happen in the conference call, but we also have a regular transcript. Sometimes you should look at the regular transcripts as well. Something very important happened in that conference call, okay? That gives me all the confidence I need in Nike that they got the right man leading this company with Elliott Hill, okay? This man was talking about his relationship with Dick's Sporting Goods and what they're doing with JD, right? If you look at the previous executives running this company, I mean, they were afraid to even mention Dick's Sporting Goods and JD and Alibaba and Foot Locker and these sorts of guys. I mean, they disrespected the retailers in such a massive way. You cannot disrespect those guys. You need tight relationships with those guys. They're a huge component of who sells Nike products. Not everybody wants to go on the Nike app and go buy a Nike product. A lot of people go to Foot Locker, Dick's Sporting Goods, JD. They go to, Alibaba if you're in China, like different places like that, okay? So you gotta have strong relationships with the retailers. And it's clear, listen to the last couple conference calls, Elliott Hill is very focused on building up strong relationships again with the retailers, which is huge, okay? If you want to talk about a lot of the problems with Nike over the past 5 years, they destroyed their relationships with retailers. That's what happens when you have somebody that never really leads businesses, that comes from the consulting world, that was in a frat, that's dad is an accountant, they think something looks good on paper, they never ran a business, so they don't know what actually works and what doesn't work, right? Now, additionally, look at something like this. This man's on a conference call talking about, earlier this month, our Nike LA door at the Grove was a home base for a highly successful global after-dark running series, hosting thousands of women runners in LA, created energy throughout the week. The day before the race, we captured our best sales day at the Grove in nearly 3 years, or in 3 years, right? Like, dude, good luck. When you get a CEO of Nike talking about this thing that other executives would be like most people would be like, why are we even talking about this? When you got a CEO that's that focused on that level of detail around what's going on, he's focused on, the sales that a store did in the Grove and then how it did its best sales in 3 years. When you got a CEO that's focused on that level of detail, you're running at a different level, man. And you're running at a different competitive spirit. And so just good luck to everybody competing against Nike over the next 5 years. Like, good luck, man, because they're going to need a whole lot of luck, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Once again, the pinned comment down there, if you're looking to apply to join my private stock group, apply to join my private wealth group, 1000xstocks.com, access to all that stuff, all my course curriculums take you up to a much higher level as an investor so you can begin to know this game on a high level and not just be like a little lost in the clouds, right? Because I'm sure there might be some stuff I talked about today that, might be confusing to you and things like that. This is even a much higher level than what we discussed in this video here today. That will be pinned comment down there. And then we'll send you your Steel membership cards to your house once you join us in there, okay? All right, guys, much love and have a great day.